Hi, this is Reza with Profiletraders. You're listening to my analysis for ES September the 10th. Overall, you're looking at this chart and you're seeing a very aggressive ups and very aggressive downs. And these aggressive ups and aggressive downs have about an average of 36 points. So in the big picture, what we got is a triangle that tried to break on the upside. And as it tried to break on the upside and approach this top, because it traveled already 80 points, it could not break that top, and some profit taking and aggressive shorting came into the market at that point, and we returned entirely back to the other side of the triangle, which was an extraordinary brutal day for the buyers. Then what we did is that as we tried to break the low of the triangle, the same way that we did try to break the high, we again failed. We failed at first here, but the first failure down here was not surprising because again we traveled a very long distance, so once we got down there it was kind of exhausted. But this second attempt that failed and returned price back into this triangle makes me completely negate and delete the triangle formation, and now unfortunately we're gonna be stuck in a trading range market. So the big parameters for the trading range areas on the upside are going to be 1993, if you want to round it up, 1995, and on the downside 1908, or I'm going to round it up to 1900. So this is the big trading range. Now within that trading range there is a zone where the buyers are quite aggressive. That is the zone between 1912 to 1900, and there is a zone where the sellers are quite aggressive, and that is the zone between more or less 1982 to 1993. Whenever you are dealing with a situation like you have right now, market is stuck within a trading range, the middle of the trading range is an absolute death zone, because every time you're in the middle of something, your chances are 50-50 that it could go either way. So the best strategy now for this kind of a market is to be very patient, to let price come into the area where the sellers have been active, or come into the areas where the buyers have been active, in order to either buy down there or sell up there. And of course, every time one decides to do that on its own, protective stops must be used to protect the position. Now obviously this will not continue forever. At some point this consolidation down here will either exit to the upside to go challenge that big leg of a drop that came in between 2100 all the way to or all the way to 2000. So if any moment we push out and clear through 2000, we will go challenge this whole area above 2000 that is hanging in that zone. On the other hand, if we decide that we are going to break to the downside, then it will be a continuation down of the last severe drop. Then we should come down, test this low, and if this low doesn't hold, as I have explained to you on my daily chart, the downside objective of this whole move is about 1775, which is exactly the length of this leg down projected from this point on to the downside. So for now, trading range, this could continue until the Federal Reserve royalties decide with what kind of a scam decision are going to come out with their meeting this coming or next week. And avoid as much as you can trading the middle of this distribution or consolidation or pause or whatever it is that you want to call it, and try to trade off of the extreme highs and the extreme lows within the zone that I just shared with you. Thank you for listening, and talk to you next time.